There are new details on the mega merger between Dow Chemical and DuPont. The combined companies, worth $130 billion, will reshape the chemical and agricultural industries and will be followed by a three-way breakup of the combined company. The three resulting companies, which would be publicly traded, would focus on agriculture, material sciences, and specialty products. Here with more details is WSJ reporter David Benoit. Hi, David. Great to see you.
Good to see you.
Tell us more details on the deal that just emerged this morning.
Sure. It's quite a mouthful, right?
Yes.
Put it together and then break it into three. So essentially what we learned this morning is the company's officially announced it as now a real deal. And we got a little bit more granularity on what's going where, and the company's analysts are sort of right now poring over trying to decide if they agree. We got that they're going to cut $3 billion in costs out of this company, which is a lot of costs to come out, and that's pretty much the headlines. And
presumably they're going to also shed a lot of jobs?
Yes. So separately this morning, DuPont actually announced even before this combination, they're going to cut 10% of their workforce. And then once they get together, the $3 billion will include a lot of overlapping jobs.
A lot of that. Now, how usual is this sort of combination that then results in a breakup?
So this is pretty rare. We've seen a lot in the past few years of breakups kind of along these lines, where essentially the companies are going to argue, our businesses, they fit together, but really they have different kind of underlying costs and different underlying businesses and would attract a different investor if it was a publicly traded company. And that's kind of the argument here. But to put it together with a huge deal is rare. We've seen a couple of them. Pfizer, in its recent deal, said it's going to immediately start shedding some assets. But this kind of is rare.
Now, is the timing to this deal at all significant?
Well, it's a little bit significant. Both these companies have been under activist investor pressure, and one deadline that was coming up this weekend, actually, Daniel Loeb, who's an activist in Dow, had been sort of muzzled via an agreement, and Monday morning is allowed to say whatever he wants.
He's taking that muzzle off.
Yep. So there's some question about whether this was kind of rushed to get done there, but also the companies are saying this morning that this is rare where the two companies have really been the same size, which makes the deal easier.
Right. Now, are there sort of specific industries where these companies are expected to have some strong synergies?
Yes. The kind of, I think, the crown jewel of this is really the agriculture business. DuPont had really been focusing the last few years on agriculture, which is seeds and pesticides and genetically modified things. DuPont had a big business. Dow had a big business, and putting them together really kind of catalyzed this.
Right. And so there have been pressures squeezing revenue at both of these companies. Looking at the sort of plan ahead, does it seem that they are effectively addressing these issues?
That's what they're arguing, that this is one way to kind of in one fell swoop ease. There's commodity pressures where their customers are both not able to sell their products as much money. Their revenues have really been struggling. And for the last few years, these companies have really been getting earnings growth by just cutting.
Right.
So the idea is this will make it a little bit more of a focused business, the three businesses.
And now what's going to happen to the two current CEOs?
So the two current CEOs, Dow's CEO, Andrew Liveris, will become executive chairman of the combined company, and he'll be overseeing what will then become the materials company.
Right.
DuPont's Edward Breen will be CEO of the new company, and then he'll probably get the agriculture company. Though Andrew Liveris sort of dropped a little hint that maybe he won't make it to the spin. He said there will be a new leader of Dow at some point.
And now how do shareholders stand to gain here? They stand to gain quite significantly if this works.
So shares are actually down a little bit today, which is a little bit surprising. They popped 12% when we reported it earlier this week. Both of them had record days. Essentially, the shareholders are going to get one share of the new company for their share. DuPont shareholders get a little bit more than one. And then they'll wind up with three different companies. And the idea is they'll pick which ones they like. If they want to be in an agriculture science company, they'll be in that one, and it will have kind of strong growth or the specialty products.
Right.
So it should be a good deal for them.
Now, of course, it still has to be approved by both regulators and shareholders.
Yes.
When is the earliest we could see this actually happen?
So the companies are saying that they're hoping to close the first part of the deal, be a combined entity by the second half of next year, and then they would proceed with the three-way split sometime in 18 to 24 months after that.
Now, looking at this proposed combination and the subsequent three companies that will come out of it, do you foresee any red flags for regulators?
Anytime you bring two $60 billion kind of historic companies that are symbolism of chemicals, I think you're going to get some questions being asked.
Yeah.
Especially agriculture, as we talked about, they have a large market share there. The companies today are saying, listen, we don't see that big of a risk. We might have to shed a few things, but there's not too much overlap.
All right, we'll see what happens. Thank you so much, David Benoit, for that.